New Holdings, one of the largest digital banks on the planet. It's a company I used to own in my portfolio. I've been following this channel for a while. I've had this company at around $4 or so, recently sold it to consolidate my portfolio to put it all into Mercado Libre. Now, does that mean that I don't like New anymore? No, like I explained, I still think it's one of the best things out there, but just because it was a small position that has appreciated quite a lot, much faster than expected, I wanted to put a bit more into Mercado Libre since that was already quite a much bigger position in my portfolio, and I'm more comfortable owning now a bit less positions in the portfolio than before. Now in this video we're going to go over New again. It's still on the watch list. It's going to be on the watch list for quite a while. If I get the opportunity to buy this stock again at a better price, I'm not going to say cheaper price because cheap is subjective, then I will probably do so. You might say, then why did you sell in the first place? Like I said, to put it into Mercado Libre. So for those of you that don't know, New is actually a position that Warren Buffett or Berkshire Hathaway owns. It's just a tiny position, 0.39%. It's under Amazon, which is also quite small. And yes, I know when I say tiny position, it's still a position worth over $1 billion. Now, as you can see, New's growth has been quite something to look at. Right now, in May, they've reached over 100 million customers. As for the quarter that they reported for Q1, they reached 99.3 million customers. That was up 20.2 million year over year, 54% of the adult population of Brazil, and an 83% monthly activity rate. Of course, it's great to have many customers, but if those customers are not active, then it makes absolutely no sense. You want to monetize as many of those as possible. Revenue increased 64% year over year on an FX neutral basis to $2.7 billion. Gross profit reached $1.2 billion, increased 76% year over year on FX neutral basis with a gross profit margin of 43%. Net income increased 160% year over year to $378.8 million with an annualized ROE of 23%. Adjusted income is also up 136% year over year to $442.7 million with an adjusted annualized ROE of 27%. And yes, they're also in Mexico and in Colombia, and they're growing quite fast there, since of course they can take whatever they learned throughout the growth phase or the slow growth phase in Brazil and implement that into Mexico and Colombia. Now, before digging a little bit deeper, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So they actually show us here the comparison between Mexico Q1 2024 and Brazil Q4 2018. With regards to customers, already more customers in Mexico right now with a 4.1% market share. Credit card is still a bit lower, although market share is a bit higher. Active new accounts is much higher as well, 3.1 million compared to 1 million, with a 2.4% market share compared to 0.5%. Credit card purchase volume is at $1.6 billion compared to $3 billion in Brazil, but a market share of 6.1% compared to 4.3%. And the pattern continues here in deposit, interest earned portfolio, and revenues. Then with regards to the activity, with regards to active customers using new accounts as their primary banking account, that is increasing as well. Number of products per active customers is increasing as well. They're reaching the average 4.1 much quicker than before. Of course, it helps brand recognition, plus more products. The business has become bigger, better products, better services, word of mouth, etc., etc. You would expect this to happen, but of course this is happening at an extremely fast pace and in a profitable way. If you look at monthly average revenue per active customers by quarterly cohorts, that has also been improving quite a lot. If we look at average revenue per active customer, that's up 30% year over year. Revenues are up 64% year over year as well. With regards to deposits, that has increased by 53% year over year to $24.3 billion, with a cost of deposit as a percentage of interbank rate at 84%. Net interest income expansion is driven by growth of interest earning portfolio. We've seen that with a lot of profitable companies, right? So we're now at a net interest margin of 19.5%, and net interest income is up 93% year over year. Now, you might think that this company is obviously growing quite fast and attracting new customers, and that might actually cost them quite a lot of money. Well, No, on the contrary. If you look at the cost to serve per active customers, year-over-year increase is basically close to 0%. And the cost to acquire is just $7 per customers. $2 is paid marketing. Cost to serve, still under $1 monthly average per active customers. That's 85% lower than incumbents. Cost of risk, 6.3% consumer finance delinquency rate, approximately 10% lower than the Brazilian industry. And the cost of funding, as we've seen, $24.3 billion in deposit, around 84% of interbank rate. So they can grow in a profitable way. Actually, they can grow extremely fast in a very much profitable way, which of course makes it extremely difficult to compete against such a company. Now, looking at the stock right now, the stock is up 40% year to date, has a forward PE of 25.1 times. Now, as you can see, the 12-month average price target from all the analysts sits at $12.46, representing just 6.84% upside from the price we're at today. The stock is up also 88% year over year. Now, 25.1 times forward PE is really not that expensive, especially not if you look at how fast this company is expected to grow top and bottom line. And let me just show you what happens even when the stock is up 40% year to date, what happens when the business fundamentals are growing extremely fast. The lowest point we were at the start of the year, forward PE 22.8 times. So we're now at 25.1 times, yet the stock is up 40%. This is why only looking at forward PE, EV to EBITDA, stuff like that doesn't always tell you the full picture, because it can tell you that at one point in time, the stock was extremely expensive. Yet, if you wait 1 quarter or two, you get more numbers out and suddenly the stock is up 40%, yet your forward multiple did not increase by that much. And so looking at the stock right now, we have been making our way back up to try and surpass those highs back in late March. If we fail to do so, this will mean a local double top, I would say, and then we could be making our way back down. The 20-day moving average sits at $11.42, the 50-day one at $11.17, and the 200-day one at $9.40. I think I would enjoy buying sub $10. Whether or not I'll get that opportunity remains to be seen, because it has been quite a while since we've seen the 200-day moving average. We've been close-ish back in September of 2023, but the last time that we were under it was in April 2023 when we went over it. And since then, we've stayed over the 200-day moving average. So overall, what do you have here? You have an extremely strong company that is growing quite fast, top and bottom line, that is making it extremely difficult for the competition to actually compete with them because of how profitable this business is. The stock is not cheap, but it's definitely not expensive as well. I do think that in the future, this company will just become bigger and bigger. Could it become a 10x opportunity? Remains to be seen. But in my opinion, $50 billion, $55 billion in market cap right now, I think it's going to get much bigger than that in the future, especially with the current growth rates. As I said, for me, it's back on the watch list right now. I'm very happy with my position in Mercado Libre, also one of the best companies around in that region and actually expanding as well. Of course, you can own both. I used to own both. Now I own one. Maybe in the future, I'll own both again. That's just my thinking here. Of course, I can be completely wrong. Maybe I sold an ultimate winner. Remains to be seen. We live and learn when we invest. Of course, do share your thoughts down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.